So I really thought the fourth quarter operating income guidance was going to be the focal point, given the implementation of $15 minimum wage starting on November 1st. The surprise to me is the sales shortfall, and it looks to me that it's a reflection of international, which decelerated 600 basis points in the third quarter versus the second quarter. But when you consider the profitability was very good in the September period, that gives me more confidence in their ability to offset higher wage with their cloud computing, advertising, and third-party retail high-margin efforts.
Kevin, as Tom says, the profitability very good, the margin better than expected. You're an owner of the stock. Are you going to buy more off the back of this?
Well, I probably would if we weren't already fully invested, but I have to say, you know, Amazon is a very strong company in a great position, and we're trying to gauge just how much upside there is in the advertising business, but it looks like there's a lot of opportunity there.
Mike, what do you make of the stock reaction here?
I just think it's a very fragile tape. This thing is traded between, you know, it's up 50% year to date, right? It traded up to the $1 trillion
In other words,
print.
nothing to change the thesis?
I don't think anything changed necessarily in terms of the long term. If you went back, I don't think, you know, a 50% gain in the stock underprices the fundamental story there. So in other words, I do think it's just kind of toggling around and figuring out what the next 3 months mean, and also interpreting what's behind exactly this guide.
But the margin, over 6%, JP Morgan estimate was 4%. I mean, that helps it with its valuation growing into that over the next couple of years, doesn't it?
Absolutely. That's where you get the operating leverage, right? So, I mean, look, these numbers are really good, but the stock was up enormous today. It's a terrible setup to go into today. But, I mean, you're looking at 46% AWS growth, right? Okay, fine. It's a slight deceleration, but that's what we saw at Microsoft with Azure. They had a slight deceleration as well. It's a law of large numbers. It's still growing. And then the ad business at 123% growth is huge, is absolutely huge. So that gives you the runway. And I think in terms of North America retail, that was actually right in line. So the disappointment is the guidance, in my mind, on operating income. And as it turns out, they probably will beat that too. So I don't think you want to get too up in arms about this report. And I think if it pulls back substantially from here, more than just 3%, then I do think you want to be buying.
I mean, the profitability is somewhat new for Amazon. I know we've seen it in the last few quarters, Tom, but what do you make of these record profit numbers? And where's it coming from? Is it these new high margin businesses, cloud, advertising, and so on? And do you expect that Stephanie's going to be right, that they can beat these numbers in the next quarter?
Yeah, I definitely think that the profitability on cloud, on third-party retail, which is 53% of units, still an all-time high, and on advertising, gave them the confidence that they could raise labor costs. And I think labor is kind of a gating factor, which we'll see when they ultimately announce the second headquarters. They've got 575,000 employees, give or take. And we still think that raising the minimum wage means Amazon intends to expand their physical footprint in retail, potentially add a lot more beyond today's 3 Amazon Go stores.
Ed, are they still testing the water on advertising, or is their foot fully down already?
No, I think they're definitely getting deeper into it. The margins on that, I'm sure they're seeing, are really nice. Again, it's where the upside, it's where the growth is going to come from. I think it's notable that they missed on the top line, but they beat big on the earnings. That's new for them, or that's relatively new for them. I mean, getting to 6% margin, that's a new territory. I think they're probably going to like having more of that cash on hand, more of the profit on hand as they start paying more in terms of minimum wage and going to HQ2. I think they're still looking for what's the next big top line growth business. Advertising could be it. They might need a media company, though, if they really want to supercharge that. But you know, that's clearly something they're going to focus more on.